We're pleased to present Lendio's recent survey of nearly 1,200 small business owners and 25 small business lenders that was published in May of 2024. I'll be walking you through the results of the survey today, but first let's start with some details about what the survey included. As I referenced, we surveyed more than nearly 1,200 small businesses. The number of employees were less than 100, with an average of roughly 2. The monthly revenue ranged between 0 and 400,000, with a mean of $12,000 in revenue per month. The time in business was a relatively wide range, with a mean of about 4.5 years. The survey of 25 lenders are those who are existing partners of Lendio's and participate on Lendio's platform. And again, that was conducted between April and May of 2024. We're going to start with some questions about the results of some questions about how small businesses finance their businesses, where they sought funding, and then some of the lessons about how they want to engage with their lenders. The first question, how did you first finance your business? Personal funds. Overwhelmingly, 75% of people founded their business and did their initial financing through funds that they had personally. Smaller portions sourced from friends and family, a bank loan with just 3%, online lenders, credit cards also at 3%. So overwhelmingly, businesses start with personal funds. How critical is access to financing for the survival of your business? Businesses overwhelmingly say it's very critical or critical. Those two combined for 72%. Somewhat critical was in at 18, and then for those who didn't value financing as a critical component of the business financing, rounded that out at 11%. So in general, businesses need access to capital for survival, and then growth. So growth is where we're going in the future. 65% of businesses viewed access to financing as one of the most important factors, 24% as important, but not the most important. And the rest were in a small minority. So overwhelmingly, it's not just important for survival, but maybe more important for growth. We also asked the small businesses, if you had access to the financing that you need, what impact would it have on revenue over the next 12 months? Now, of course, we know that small business owners are optimists by nature. And so these are their expectations of growth. You can see some of the massive numbers up there in the upper left, 12% expecting 3x growth, 8% expecting 2 to 3x growth, and then it goes around. But in general, what you find is small business owners believe that they need financing, and they have optimism about their growth prospects, I might add, even in this challenging macroeconomic environment. Now we're going to shift a little bit towards where the lending is coming from and where the borrowers start on their lending journey. We asked the borrowers, the small businesses, what type of lender have you applied with in the past? Check all that apply. At the top, you see a bank or credit union that I've already worked with, followed by a bank or credit union that I have not worked with. So people generally are going to start with the ones they know. Look at this incredible number of those who came to an online lender. 57% is a massive number. And then when you get down to the very last row there, online marketplace, for example, Lendio at 35%. I might add that these numbers, third-party tech platforms and third-party vendors are continuing to grow. That's sort of the embedded finance, captive finance arm type of world, which is extremely prevalent in e-commerce, but is also growing in other sectors. We also asked the borrowers or small businesses, what kind of business financing are they seeking? You'll see at the top, term loan and line of credit at 40 and 45%, and then SBA loan at 53%. So these are all typically bank products, although we do see some term and line of credit lenders amongst non-banks. I might add, and I'm sure those who are paying close attention note that these numbers add up to a lot more than 100%. That's because we asked the borrowers to check all that apply. And so you're seeing percentages here that add up well above 100. And it is common for a borrower to not actually know or have specific plans about the type of funding, and they're just looking for what are the products that are out there, the rates, the approved loan amounts, and so on that would fit their business need. So then we asked about preference. Regardless of where you shop, where would you actually prefer to get the loan? And this is really striking. 67% of small businesses have no preference whatsoever. They do not care where they get the money. They care about a lot of things. They care about when they're going to get funded. They care about the timing. They care about the rate or cost of funds. They care about the loan term, but they don't care where it comes from. You can see in the upper right there, a bank or credit union I've worked with, or any bank or credit union, people generally do not have that much loyalty on their credit products. And then on the right side, an online lender also does not have that much loyalty. Again, it goes back to this idea that preference and loyalty in this type of lending is small. And this slide reinforces the previous point, which is basically that there is no real preference for banks. And so if I'm a bank and I think, oh, well, my small business customer, because I have a deposit relationship, is likely to come to me for funding, they will shop that. We asked, does the bank your business uses for checking have the right loan options for you? And this is again striking, and it kind of speaks to product availability and marketing of the financial institutions. More than 50% said they don't know. And that's really striking, because you could have an extremely, what appears to be an extremely loyal and long-term relationship with your bank, and yet, or the bank, from the bank's perspective, they think this is a long-term and loyal relationship, and yet the small business owner doesn't know about the lending products that are available to them. If I go to the upper right, my bank has limited financing options that meet my need. And 14% say my bank has loan and financing options that meet all of my needs. And then on the bottom right, wow, more than a quarter of my bank has no financing options that meet my need at 28%. There's been a historical lack of availability of funding. And look at this 50% number that we just talked about. People just don't know what their banks are offering to them. So then we asked about speed. How important is it to be funded quickly? Well, more than 50% said that it was important, and 35% said it was the most important factor. So that's, if you think about it, a combined 85 that are saying that speed to funding is important. And this next slide reinforces that. And when we say speed, we're not talking about weeks or months, we're talking about hours or days. And those funding times, particularly with the lenders that Lendio is working with, have just continued to be chiseled down over time. We asked how an applicant, a small business owner, would prefer to apply for a loan. 77% said online or via mobile, 16% said hybrid, and 7% in person. Those institutions, bank institutions who are thinking that the branch network is going to be their savior on the customer loyalty standpoint, unfortunately, things are changing very quickly, and online mobile adoption has risen rapidly, particularly since the pandemic, and nearly 93% are saying that that is their preferred way to interact from an application standpoint. We asked about sentiment. Does the small business owner believe that they'll have more or less access to capital over the next year? 78% said that they'll have more access to capital. 17% said about the same. And so I think this is just an outlook on bank balance sheets starting to loosen up, and rates starting to come down. And small business owners, by their nature, are optimists and are looking forward to more access to capital in the future. Now we're over to lenders. So we asked 25 lenders how things are going in their business, what they saw in the future. We asked, do you foresee the volume of SMB loans that you issue growing or shrinking in the next 6 months? 80% said that they expected the volume of SMB loans to grow over the next year. And how would you rate your ability to access capital for your businesses? This is back to the small business. On the upper right, very Positive, I can compare a broad range of lenders and loan options to find competitive offers for my business. Bottom right, I'm confident in my ability to receive them. Neutral, average to capital access, but I know that I can ultimately get funding. And then the upper left are the ones who perceived it very poorly. So I think in general, what you find is this is a pretty even split on sentiment about access to capital. And not for nothing, that's probably also a byproduct of just the health and age and maturity of the business itself. Back to the lenders, what is your perception of an SMB's ability to access capital in the current market? Poor on the right, 32%, below market average, 24% on the bottom there, neutral, and then on the left, 28%. Again, pretty even split in terms of how lenders perceive the ability of the small business owner to access capital. So that kind of wraps up the summary of our survey results. We hope that you found that useful. I just want to share a few quick thoughts about the market for business lending and what Lendio is doing to solve some of these challenges. So small business lending is a major challenge. 90% of small businesses by count, there's 32 million of them, but 90% of those are very small. And as an institution who's lending, it's nearly impossible to deploy manual underwriting to a loan of less than $250,000 and still achieve a desirable ROI. That's because manual underwriting processes are extremely expensive. Personal credit scores, which have been used as sort of a backstop for credit decisioning in small business for some time, really don't represent the business health. They are an inadequate summary of business health. And then lastly, business credit scores also don't take into account cash flows and are effectively just a blend of small business credit scores. So what we're aiming towards here is a much more well-rounded view of the borrower that enables a lender to automate decisioning. So we at Lendio offer a solution we call intelligent lending. It's technology that makes small business lending profitable at any size. You can see on the left the representation of a demo bank, Corner Bank, and the start of an online and mobile experience for an application. Lendio's technology behind the scenes, in addition to a really great leading edge borrower experience, collects the policy from the lender. And that includes not just normal sort of DSCR type of or credit score type of metrics, but average monthly sales, time in business, personal credit score, entity type, industry, NSF, average daily balance, and so on, analyzes those against the borrower analytics. So this is on a specific business, Phillips Concrete, and we can measure the parameters of that business against the lender's policy, run it through a decision algorithm, and then on the right side here, we dynamically offer a loan back out to that applicant without a human having to have reviewed it, although that's possible if the lender chooses to interject. So that's it in summary. We are pleased to present these survey results to you and pleased with the opportunity to share with you a little bit about Lendio and what we're offering to small businesses ultimately, but to the lenders who serve them.